All right, guys. Good morning, guys. My name is Chooks. I've come back here to continue with my analysis of gold that we started during the week. And like I told us, I'm going to give you step by step, update on this trade as the setups are unfolding. I will tell us, what is happening in the market and when the opportunities present themselves. Okay. All right. So, guys, we did say that the last time we said we are going to wait for price to break through this structure and pull back to retest. Okay. Now the pullback has happened. Okay. The breakout has happened, rather, the pullback has happened, and it has given us a signal for us to enter the market. Okay, like I told us, guys, not just the break and retest, okay, but we have to have the appropriate signal for us to enter the market. I've already sent out a signal for us to buy gold, okay, even though we are late, but that's not a problem. I think the market is still going to push up reasonably well because this chart pattern, falling wedge in a rising market is a very powerful chart pattern, okay? And most often than not, it plays out its psychology. Okay, so guys, let's look at the price action that unfolded here. So we waited from here. We started expecting this market from this time period, okay, until when it broke structure, okay, here, and we said no. We agreed that there are two entry strategies here. Number one entry strategy is at the break of this structure, you enter a buy a buy trade, okay? Or rather, that's if you are aggressive for the aggressive entry approach. I mean, for the aggressive entry approach, this at the close of this candlestick that broke out, this breakout candlestick, you can enter a buy from this point, okay? That is the aggressive strategy. Then the conservative strategy is that you wait for the market to pull back the structure and you enter a buy. Okay, so what is the structure and where is the pullback? Okay, now I use the 21 period moving average as my dynamic support structure. Okay, now it's a very powerful moving average that I personally use to gauge the market. Okay, I use it to add confidence to my trade. So the price put exactly at the exponential moving average 21 period, you know, now the MA just is acting as dynamic support here. And you can see how price pulled back to it and formed a candlestick pattern, okay, a bullish engulfing pattern here, which is an additional confirmation for me, okay. Now the third confirmation is this, okay, this is the Fibonacci levels, 61.8% and 50% Fibonacci. Now, this price action happened at the 50% Fibonacci retracement level, okay, which is an added confluence. All right. So, guys, I have four confluence factors. Okay. Number one, break and retest. Okay. Number two, I have the 21 period moving average structure of support. Number three, I have the Fibonacci level structure. Okay, so guys, this is just sufficient confidence factor for me. Minimum of three is okay. All right. So at this point, guys, you can put the trigger and buy this commodity. Okay. The other thing you can do to be, some people are very cautious, and be sure they want to enter the trade at the right time. The other thing is that we can apply market structure. Okay. Now we can say, okay, this is the recent high. Okay. This is the recent high. All right. This is the recent high. If price breaks and close above this high, a new high will be created. And so that reinforces the move to the upside. Okay. That reinforces the move to the upside. That is, if price breaks above this structure, so here, if price closes above this level, we have created a break of structure. Okay, the price has broken structure at this high. Okay, then if price closes above this level, then we can confirm that there is a break of structure, and the chances are good that this market will continue to push up. Okay, so guys, that is my thought process for gold. Okay, so if you want to enter it, let me tell us what to do. You can decide to enter the market from here. Okay, you enter from that point, 2 to 1 risk to reward ratio. Put your take profit at 2 to 1 ratio. Okay, to your risk. Then you can place your stop loss behind the previous swing low. Okay, and this is the swing low. Okay, recent swing low rather. I put my stop loss below this swing low, okay? And this is where it is, all right? So I just need the 2 to 1 risk to reward ratio, which is very good. This is 2 to 1. I'm okay. You can take a profit at structure level. This is the next structure level. But I just want it to be before the next structure level, the next swing high, okay? So guys, this gives me a perfect trade setup, guys, okay? We can just leave it here and continue to monitor this market. Guys, I hope you enjoyed this analysis from beginning to the end, okay? Now we just have to wait for market to play out and see what the outcome of this trade will be, guys. I hope you enjoyed it. If you have anything that is confusing you, anything you don't understand, please get back to me. I'll be glad to, to explain further to you guys, okay? I think we should be able to make some reasonable profit from this market, guys. So just enter with your best loss size, okay, for this trade. All right. Okay, guys, thank you very much. That's all I have for us for good. Today is Thursday. I don't trade on Fridays. All right. So I don't know what Friday will hold, but if you are in the market on Friday, please watch it. Fridays are usually very, very, very volatile day in the market, particularly because of the news that come out on Friday. So, but just look at Forex Factory and see if there's any news that will affect this gold trade. Okay, let's see if there's any news that will affect it. Just a moment, guys. Let's look at Forex Factory. All right. Okay, fine. Okay, so we have 2:30 p.m. Unemployment claim. This is a high impact news, guys. This news is high impact, guys. So be careful. Your gold trade, watch it. The moment it is 2:30 thereabout, okay, or rather 2 p.m. to Nigerian time or GMT +1. Please, if you are in profit, just go and close your that gold trade. Go and close it. That particular news will affect gold drastically. Okay, will affect gold drastically. Well, for me, I'm a technical trader. I fundamental is just 20% of my trading consideration. Now, since you are trading from a higher time frame, that is 4 hour or daily time frame, news may not have much impact on your trade. Okay, so if you are in the market in the 4 hour time frame, okay, I advise you to just hold your trade. Just make sure you set a very good stop loss, okay? Set a very smart stop loss, all right? Then let the market do its thing, okay? Let the market do its thing, okay? So there's a high impact news coming out by 2:30. By 2 p.m., please look at your trade, okay? If you have made some reasonable profit, just take some partial profits, okay? And let the market run. Take partial profit. Leave the stop loss where it is, please. Okay, and let's see how this market will play out. Okay, all right, guys. Thank you very much, and do have a blessed day. Bye bye.